Hi everyone, welcome to another video on my channel, Orderflow with Ethan. So, my name is Ethan, I'm 20 years old, I've been trading Orderflow for roughly 4 years now, and throughout these 4 years, I have discovered a lot about how the market works and how to understand the market behavior behind the Orderflow footprint chart. So, and here am I right now on YouTube, sharing my knowledge with people in the internet. Hopefully, this will be helpful for you guys, and maybe we can start building a community together where we trade real trading. So, welcome to section 8, the importance of delta. So, in this video, you're going to see how to read buying and selling pressure in real time. Delta is one of the most important tools in order flow trading, yet most traders ignore it. While candlesticks show price movement, delta shows the real battle behind buyers and sellers. Understanding delta is what separates guessing traders from those who trade with confidence. So, what is delta? It measures the difference between buying and selling at each price level, as I showed you before. So, if you have 500 people buying minus 300 people selling, that's a positive delta of 200. It tells you how aggressive the buyers are, how aggressive the sellers are, and which side is in control. You can think of it like a scoreboard, okay? The candles show the result, but delta shows who's winning the fight behind the scene. So, if we have, as I said, 500 people buying in one candlestick and 700 people are selling, then we'd have a negative delta of 2 minus 200. So price can move without strength and a candle may look bullish, but if delta shows weak buying, the chances are the move is not real. On the other hand, a small pullback with strong positive delta can indicate hidden strength. In short, delta gives you clarity and confidence and showing you where the real money is moving. So let's see a real market example. Price is pushing up to a resistance level, candles look strong, traders see a breakout forming, but when you look at delta, we have aggressive buyers who are fading and sellers who are absorbing the buying pressure, and the breakout is likely to fail. And most traders will get trapped, but delta reveals the truth before the price reacts. So I think it's too small here for you guys to see. So if you go here, for example, we have 600 minus 96, 341, 751 at this one, and then we go straight to minus 52, minus 165, 42, 95. Again, we start to build a great momentum, minus 430, 400 even, and then a great change of 800 something. So we go back to minus 423, and then the downtrend started with a lot of divergence here and these imbalances. We see the mean max delta going from 500 to minus 454, and that's where you understand that sellers basically took control of the market and buyers just got weaker. So delta works best when it's combined with support and resistance levels, market structure, volume, and liquidity zones. Delta alone doesn't replace charts, but enhances them and showing you who controls the market at each level. So now we're going to talk about the max delta and mean delta and why is it so important. Maximum delta shows the strongest aggression in the market, highlighting where buyers or sellers dominate. It confirms real momentum behind the move, reveals the institutional activity at key levels, and it helps you identify smart entries and exits. Max delta lets you see where the real power is instead of just guessing from candles. So we can see the max delta here being at 32, 23, 0, 13, 0, then changing to 58, 137, 53, 118, 213. So we can see the change happening exactly here, and the market just went to another level again. And it lets you see where the real power is instead of just guessing from candles, as I said. So yes, we can see that the market went down, then went up. But if we watch the max delta, we can see the shift in max delta. Went from being slightly positive with low results to very far from zero. So let's talk about mean delta instead. Minimum delta shows weakness or fading activity. It reveals where one side is losing control. It signals potential reversals or exhaustion. It helps avoid traps and false breakouts, and it highlights where price may struggle despite candle movement. So minimum delta lets you see where the market may weaken even when price looks strong. So here again, once we go back to the minimum delta, it was what minus 215, minus 109, minus 400, minus 300, minus 400, minus 19, minus 200, minus 72, and then we went back to 0, 0. So you can see minimum delta going back to a positive number slowly, and that's where you understand that there is a shift happening in the market. So delta reveals the real fight between the buyers and sellers. Candles show results, but delta shows the intent. Reading delta lets you avoid traps and enter with an edge. So every serious order flow trader monitors delta closely. So thank you for your time again watching this video, and I hope to see you in the next video. We're going to talk about mistakes people make while trading order flow. And please, if you do have any ideas, if you have anything you want me to cover in my videos, please do let me know in the comment section. I'll be waiting for your comments. So this is Ethan here from Order Flow with Ethan. I post 3 videos daily from Monday to Friday. And yes, if you guys have any questions about the order flow, you can just let me know in the comment section. And I will be very, very happy to help you in anything. So thank you, and I'll see you in the next video.